Only mode.
Hey, what's up, guys? Todd here from Trading Analysis, and just talking to Tony. We just kind of got in a conversation. I'm like, hold on, let's just have this conversation publicly. So Tony's just updating me on the possible new beta version of version 5 of MotiveWave, which is the charting software we use here on Wednesday, and I use every day on the trade desk. So Tony was telling me you might see a beta version of the new software by the end of September. Correct? That's about 2 weeks away.
Yeah, that is the current goal. Been working on it really hard over the past few months. Just trying to close up any missing functionality that's not done yet. But more importantly, over the past couple of weeks, really been focusing on trying to fix any bugs and make sure that this is pretty rock solid before we have anybody else look at it.
That's awesome. That's awesome. Tony was saying he's going to send over a pre-beta. Me and a couple other guys who run businesses like this will take a look at it and get as much of our feedback in. And that's great, man. We've been working with this software for 5, 6, 7 years now, and can't wait to see what you guys are coming up with. I'm psyched.
Yeah, well, me too. I guess you're still on a Mac, right?
I'm still on a Mac, but I might jump ship. I might go back to
okay.
Whatever. I got to see how MotiveWave acts on how it does on the Mac. But I mean, do you think the Mac experience is going to be tremendously better? And it's not just MotiveWave's problem. It's not at all. I think Mac for trading in general is maybe not ideal.
Yeah. Well, all the development I've been doing since like around June timeframe, it's all been on the Mac.
Okay.
So as a result, just by the virtue of doing development on the Mac, any issues that are Mac specific, I'm seeing and I'm fixing.
Okay.
In fact, I'm noticing that when we go back to the PC, there are issues on the PC. But I've got Joe, just little things like just in terms of layouts, like sometimes you bring up a dialogue, and part of it will be cut off just because for some reason the PC is larger.
Yeah.
I would have thought it'd be the other way around, but Joe is doing a pretty good job of going through and checking everything to make sure it's all very solid on the PC.
Okay.
I still need to get parallels on mine, so.
Yeah, I have parallels, and I struggle with, and this has nothing to do with you. I struggle with parallels. Maybe somebody can help me with this, but parallels across 3 different 34-inch monitors really doesn't perform that well. It kind of gets a little goofy, and I'm just saying it's not. I can't run Windows on the Mac with parallels across that kind of real estate. I have a problem with that.
Okay.
So, but this. Nobody cares about this, and you shouldn't care about this. This is my own issue. So, but that's awesome, man. That's awesome. I'll work that out. But congratulations! I know you've been working your tail off on that, and I can't wait to get the pre-beta version. I feel so special.
Yeah, so the pre-beta, we're just trying to limit it because I don't want to have about 20 people reporting the same issue. Otherwise, it just ends up being a lot more work on our side to fix something.
Right.
But we're probably going to approach a couple of other people on our list and see if they want to try it next week as well.
Awesome. I can't wait to clear up my schedule.
All right.
Sounds good. Appreciate that, Tony. That's Tony Lindsay from MotiveWave, and he's the mastermind behind the software we're using here that we're going to try to figure out what's going on in this market. We are recording, and let's see. Yippee, I see a chart, says Kathy. Sounds good. Robert GV says, I don't think you can ever go back. I love my Mac for editing my YouTube videos and getting creative and stuff. I don't know. We'll see. I'm very indecisive. I change my mind like I change socks. So that's probably what's up. So, all right, let's dive in, guys. So volatility is here finally, and we've been talking about it. We've all been waiting for it, and it's here. So if you guys have been following pretty regularly, we've been very kind of honed in on a key time zone on this daily S&P chart. So, I'll hit this quick because we go over this every week, but I love to see the market respond to this key time zone of we'll call it fib time resistance. So just getting real simple, the drop from July 2015 down to the lows here on February 11th, 2016 was 144 bars. And then if you project 144 bars up, that's going to be this guy right here, B versus A, 100%. And that was September 3rd. I've also done it manually right down here, the same study right there. Also interesting, let me just make sure this is lined up. Yep, and yep, got the low there. I just want, they're off by like a day or two, but that's okay. Oh, it's pretty much the same thing. If you pull in the 0.618 time projection, you'll see that actually the 618 just about caught the pullback here. Almost. The 618 time was right there. We got that low. We just missed the 618. Then we went up to the 100%. So really nice there. On top of that, if we get inside of the rally from February 2016, we do A to an ABC, a beautiful expanded flat. Up in the next C, okay, you're looking at another key timing date of September 2nd right here. So there was a lot of key timing right up into that zone. So more so, 46 bars up was the A wave, 46 bars down was the B wave, and then 46 bars up gave you September 2nd. So September 2nd to the 3rd was a major decision point, and I've been saying that for weeks. Then all of a sudden, the market just kind of volatility explodes, volume explodes, ranges explode. So it's starting to manifest here. Now, the big question on the table that keeps me up at night is this an A, B, C? And if this is a corrective ABC rally, whether it's the B wave of a flat or a triangle, I don't care. You know, we need to be sub 1900 pretty much by the time the snow flies here in the northern hemisphere. So that's the major question on the table is this an ABC? I am prepared with a bullish count if this is not an ABC, but in fact 1, 2, and this is a smaller 1, 2, and this little pullback here is a major buying opportunity. There is a lot of support here, and let me just get rid of this little fib, put them on a smaller, let's go less than a day. Oops. That should work. Okay. So the other question is this again a 1, 2, and we're about to rip higher in a wave 3 of a 3. Okay, and that's a big question on the table. And I think we're going to answer the question between 2123 and 2168. Okay, this is your wave 2 pullback zone. We have a minor buy wave right here. This is the power wave. This is the new indicator I'm using to fortify the fib analysis. That's the thin green line right on top of a 38% retracement on top of traditional broken trendline resistance here that is switched to serve as support. So you have a lot of support here, 2122 trendline support, 38% retracement. I'm net short. I added to shorts with customers yesterday. I think we're going to break through. More typically, a wave 2 should be able to get down to a 50 and a 61% price retracement of wave 1. On top of the 61, we have the major buy wave as well. Okay, and if those of you who have the indicator that came with the new Fibonacci interactive training course, I'm using a 500 period look back on the 55 period DMI setting. So the major power wave comes in 2067. Here's the whole plan here today, guys. If we rally sharply up today, I think this whole thing was just a false break. I got to cover my shorts, and we got to look for a sharp rally higher. If we break through 2120, I'm immediately going to try to be short more than I'm already short down to 2070. That's my plan. Don't know which wave count is correct. It's no shortcoming of Elliott Wave. I have a perfectly laid out plan. If A happens, then we're going to do B. If C happens, then we're going to do D. Okay, that is my mission today. Mithu says, I'm in my class lecture, so I can't have audio. You must be in college right now. That's awesome. Watching online, but he can't listen to audio because he's in a college class. That's great. I love that. I wish I had that technology when I was in college. I'd be doing the same thing. I actually never went to college. I never went to class. I was just trading in my dorm room, or I was ski racing, one of the two. So as we get down into the bullish count, and again, I'm showing you both scenarios. I think the market is going to break lower. And one of the reasons before we get into the Elliott Wave is we have a low here on September 12th to the high. We broke the 786 retracement, okay, at 21.28. Generally, if this guy is going to rally, we really need to hold that final 786, and we really didn't. So I think there's a decent chance the little strength that we're seeing in Globex markets right now will be faded, and let's even just play with the bullish count for now. That should take us lower. But as I said, I'm more than willing, able, and ready to scrap this bullish count. So 2068, let me just go back and confirm that. 2068 is my focus for today's session if we break 2120. I mean, we might not get an 80-point down day in the S&P today. Well, let me think about it. 70, it's 50 points. That's within reason. That's within reason. So that's going to be my focus downside. So go from the daily down to the 1 hour. Let's just work with a bullish count for now to bring us down to 2068. And that's going to be 2068 right there. So if we can't get any kind of rally here today, I immediately think you want to be short down to this area, and that's what we're going to do. If we get down to this level right here, 2068, we're going to have a ton of profits in our account, and I'm going to be trading the wrong wave count. Perfect. That's fine. That's absolutely fine because we have our bearish count ready to go. Okay, so the 2068 is right here. This is on the bearish count, and if this, I don't even want to, let's just deal with it. The way I look at this is let's deal with it one leg or one swing at a time. If you get down to 2065 and there's no buyers in the market, we just get a little weak wave 2 rally up, then that's when some real selling could come in. But I don't even want to, I'm not even thinking about that right now. I'm just trying to position our shorts. All of our option trades that we have with our research customers are just trying to get us down to this point right here. That's the next major decision point. Okay, let me take a breath. Repeat that. No, Peter, sorry. Which part? Can you please repeat that? What? Repeat what? Repeat what? All right. So that's the S&P. The major asset classes that are driving right now, it's not about the dollar. Okay, you can forget about the dollar. It showed like the smallest hint of strength yesterday, but this is not about the currency markets yet. I'm not saying it will be, but guys, look at this chart. Look at this daily chart of the dollar. It's not doing anything. The dollar is so confused right now. Don't be trading the dollar in here. It's the tightest it's been in a year and a half, right? I mean, that's what good charting analysis is for. Like, there's no real profit potential in here. Unless you're really selling options and taking a ton of risk by selling, far out 1 and 2 standard deviation option spreads around this, until this consolidation in the dollar breaks, there's no opportunity. It's amazing how quiet the dollar is relative to the stock indexes, as well as the bonds. The other market that's just not moving right now are commodities. If you look at the daily on crude oil, we're falling into a pretty nice triangle, which means there's really nothing going on. So I was about to put a wave 3 move on this, but I'm pretty sure we're falling into a sideways triangle. So crude oil, if we start breaking down below this uptrend support right here, okay, fine, then we can talk. If you start getting crude reattacking the 40 level here or attacking the 40 level, okay, maybe we can get an impulsive decline down in the crude oil market. A rallying dollar from that consolidation would certainly help, but so far it's not about commodities in here. It's about bonds and stock indexes. So over to bonds, TLT. Let me work the 30-year chart here. I think I'm looking at this count. Okay. So bonds are interesting. We have broken lower. I'm looking at this thing as a down in A, triangle B, and then I'm looking at potential support here in the bond market. So this is the 30-year daily of the bond futures, and as much as you want to be short bonds because they're raising rates, we have come out of a triangle, and a triangle really doesn't happen in a good impulsive move. A triangle would only occur in a fourth wave. This is clearly not a fourth wave because we've got a first push, a sideways push for triangle, and then this is the third push in this sequence. So anytime the triangle is in the second location, it usually suggests it's an A, B, C. Okay. And if we look at the C versus A, 100% of blue A Fibonacci projection gave you a low right here. We also have the major power wave right here, 164 and 26/30 seconds, and the 1272. So as much as you want to be short bonds, this pattern says we should be looking for support in the bond market. Okay, so let's do an external retracement of C versus B. Let's try that again. External retracement of C versus B. Oh, there we go. Okay, so we got in between the 200% and the 2618. This is an external retracement of B down to C. So, we're looking at support here in the bond market. If you start to get a move up from 164 and pretty much the lows here in TLT, bonds could be in for a buy. And I think I saw somebody, Joe Trader, just said it, Fed will chicken out again. I definitely believe that. So I kind of think the bonds might be a buy, but not until we see, down on the intraday chart here, not until you see a good evidence of an impulsive move to the upside would I even consider it. And what does that look like? It looks like this. That's why Elliott Wave is awesome, because it almost doesn't matter what all this decline is until you see that pattern on a smaller time frame, which is a good 5-wave move up, which we're starting to get it. But I need to see a good third wave. Corrections are never 5-wave moves like this. That means if you see a 5-wave move up, it's usually part of something much bigger. So the 5-wave move would be this. We'll go like that. And let's just decompose you like that. Okay, if you see a good 5-wave move up like that, then you're like, okay, let's go ahead and try to buy the first correction. ABC stops below the low. That's a low risk, high reward way to counter trend trade a market using Elliott and Fib. Okay, but not until you see that would I look at the other side of bonds. Okay. Commodity. Well, that's my point, Ruben. Commodities are they're kind of weak, but how do I explain this? It's like you gotta, when you're trading for a while, you just realize that the money's made in the markets that are really moving. And the way I look at it, that the crude oil market and the gold have been so sideways and doing nothing for months. Like there's not really a lot of money to be made in here compared to stocks. Stocks are moving a lot more right now. If we break out, sure, the crude oil to the downside, a stronger dollar would definitely help. But just see how that's a sideways consolidation pattern right there in crude. And if you flip over to the S&P, this is going to be a different looking chart when it comes up. Okay, we were in a big time sideways consolidation, but now it's gone sideways. Now, the one thing with IQ data is weird. This is not what the daily chart looks like. Not until the market opens in 10 minutes will yesterday's bar print in there. So just keep that in mind. So that's the stock market. That's bonds. It's gold. Let's take a look at gold. I'd love to be long gold, but again, it's just it can't break one way or the other. It's in a nice position to do so. We're into a nice support zone here, but if you just take away all the noise, and I'll leave the harmonic pattern up there, but gold's pretty much sideways. If we go down to the let me see what time frame we're looking at here. So that's the red. Okay. Gold has the possibility on this 60-minute chart, and I left my research customers with this support level last night. It's like, guys, we have a major buy wave, the power wave at 1317, and the 786 retracement. So that has been the low. If you start breaking up through these levels, gold could be in a good position to begin to move higher. And again, that would be the Fed kind of backing away and not threatening an increase in interest rates and anytime soon. So gold is in a potentially a buy situation on the hourly, but you got to keep in mind that this daily is pretty quiet for the most part. We really haven't got that much volatility. All right. We put on a bunch of shorts yesterday with research customers. Let me pull those out for you. All right, members area. All right, members area. Let's try that again. It always sends me to the back end to update the website. Trade desk, we put on a couple positions. I saw somebody asking about Costco. A message was asking about Costco. We did move into CVS, and we did a 91.89 put debit spread in CVS. The reason we did CVS, and I looked at Costco, but they are consumer staples. And what's happening is, as the bond yields are moving up, which, you know, I'll trust that for now. Bond prices are moving down, as I showed you. TLT's into support, so I'm not sure how long that's going to last. But yields are moving up, so consumer staples are coming under pressure. And we looked at a couple different staples, like CVS and like Costco and other dividend payers. As bond yields are moving up in this uncertain environment, people are more likely to move out of dividend-paying stocks and into the safety of bonds as rates are going up. So that's why we looked at CVS. So let's take a look at him. Kind of a boring stock, but not a bad chart. So it'll take a second to load in here, especially when I'm doing the webinar software. It takes a while. And then the other one, while that's loading, we also put on Exxon. So as much as I was saying, you know, the crude oil market is weak or is sideways, beginning to act weak, Exxon is in a really nice sell position. So we put a short on there as well. Okay, I don't know if I have wave counts done over here. I don't. So this is really pretty simple. If you look at CVS on the daily, really sideways, and it looks like we're trying to break through the 2015, 16 kind of support there. Oops, Command Z. Delete. I meant to put a trend line there. Okay, so I guess you can put the trend line there. Trend line analysis is probably the most subjective form of technicals out there. But we go down an A, then it'd probably be A, B, C, D, E, right? Triangle, which is typical of a B wave. So let's see. It's not an ideal, but it's not bad. Triangle. Okay, not bad. And it looks like we're beginning to move lower in the C wave here. So we'll do ratio analysis C versus A. The minimum target should be 85, which is a 38% retracement or 30% projection. Okay, so we're beginning to push lower. If we can get through the 90 level, CVS looks good on the downside. The other one that we put on is Exxon, which XOM. Very weak stock. I think the stocks are starting to lead the crude oil market lower. As I said, I'm tentatively bearish on crude, but I think the stocks look better. So let's do a quick little bringing the analysis there. So it looks like we have a first push, ABC correction. We're beginning to break the range lows, and we should be able to move down into minimum this little agreement of fib at 83. And then we should be able to get down to this pair at 79. So Exxon looks pretty good on the downside, and that would certainly put crude back below the $40 mark. So Exxon looks good. We have that trade working. We also have EEM, and I traded that one publicly in YouTube for the last couple of weeks. So I put that trade right out there, and that guy is doing okay. Let me show MotiveWave main. All products, EEM. You guys should be able to see my screen here. We have the 30, what do we have? We have the 37 half, 33 half put spread on. EEM trading 36.14. So, you know, we still have another $2.50, 60 cents on the downside. So still another $2,600 potential in profit there in EEM. And this guy has been acting weak. Emerging markets could be foretelling a stronger dollar. As I said, it's still range bound. The dollar index is still range bound, but emerging markets are selling off. The dollar strengthens. Those emerging currencies will weaken, which will hurt their economies. Strengthened dollar also does hurt the commodities, which will hurt their economy. So there's a lot of kind of reasons to want to be short EEM. There is a very nice wave count going on in EEM as well. And I talked about this one on the public video, executed the trade live and all that. So it looks like a nice ABC move up. There was a really nice agreement between 618 time of, here, I'll just get rid of everything but this. 618 time of green C compared to green A, and 618 price of green A compared to green C. And that agreement was right there. So we just missed a perfect tag of 618 price and time. So you get down into the smaller wave counts here. We have a completed 5-wave move. We've broken through trendline support. We should be able to get down to 3450, which is trendline support as well as the major buy power wave. 38% retracement, the entire rally up is at 33. So we're trying to get down to this zone right here. Just take it one swing down. That should correspond with 2068, which is where I opened the webinar here this morning in terms of my immediate downside target. I think that's it. All right, let me just take, sorry to just run over you guys and not take a lot of questions. I just wanted to get that out there for you. How'd you study Elliott Wave, Andrew? Yeah, there's a book out there by Prechter, and then it's a really confusing book, but what I did was I found about 3 guys who are really good at Elliott Wave, and I followed them and I bothered him and I wrote him emails and kept sending my counts to them. There was one guy who worked at UBS, Jim Chorick, another guy who worked at Morgan Stanley Investment Bank, which was Andrew Baptiste, and then another guy you guys never heard of. I just bothered them until I got it down, until I could do the counts before they could. I just knew it was the way to go. Yeah, we look at Apple quick. Sure. Apple's really bucking the trend, and it's up pre-market. It was up at 108.60. It was in a nice 4th wave buy pattern. Then that news from the T-Mobile CEO came out, and I thought that was pretty convenient. But what's going on there? Daily chart. Okay. So this was the pattern in Apple, and then we went down into fib support, and I was like, guys, there's definitely support here. Then the news of the T-Mobile CEO coming out saying iPhone 7 demand is going to be strong. So it looks pretty good. I mean, if the market were to bounce, overall market were to bounce, Apple should be able to move up into the 112 to 115 mark based on this wave 5. So yes, I definitely think it is a wave 5. Yeah, right there, pin. So yeah, Apple's trading pretty well in here. So we're open. Okay, how do I become a research customer? Good question there. If you guys want, I always give you guys the back door here. So here is my website, tradinganalysis.com. Okay, and you can come in the front door here with this orange button. They'll charge you $47 for a 30-day long trial. You get the text messages, all member content. But if you want, use this link right here and you can get a 30-day trial as well. www.tradinganalysis.com/motivate. MOTIVATE. And that should take you to a checkout link for $7. And you get the 30 days. You get SMS trade alerts, members only webinars, tutorials, trading software, brokers, workspace download, position calculator. You get the full member experience, which is all in here, which includes the trade desk, which I showed you. That is all the positions that we're holding and trading. I send out a SMS text alert every time I make a move in the markets. I send it to you. You get the chart room, which is all the major markets that we talked about on 3 different time frames of analysis, kind of explain what's going on. Get the daily video. I do once a day, 10, 15, 20-minute video. This was yesterday's member webinar. So just kind of explaining to you what I'm seeing and the trades that we're working. This is the Fibonacci Mastery course. This is that premium course that we just launched last month, which I'm doing live trading in 30 minutes. The man cave, other resources, so all the tutorials and all that. So that's the offering for the $7 trial. So again, if you guys would like to get in there, you go to www.tradinganalysis.com/motivate, MOTIVATE. And you're good to go. All right. So after that, it's 177 a month. Kathy, are you in the? Yeah, you're in the live. You're in the Fibonacci interactive course, right? Well, so you haven't completed the quizzes? Yeah, that's all right. Yeah, so if you're in the Fibonacci, the interactive course, yeah, the sign up link for the course is right here. We go members, Fibonacci Mastery course. So here's the massive course that we just put out. And then the live trading archive. So we have last week's live trading up, which is here. And here's your registration link for today. It's actually at 10:30, excuse me, 10:30. So you can register right there for today's session. Sean just says it's worth it. Haven't made money yet, but damn, I learned so much. That's awesome, Sean. I love the courses, Sam. Cool. Yeah, I sent a survey out, and I've included a survey. Those of you who bought the Fib course, I sent a survey out and put it at the bottom of your customer feedback and survey, and it's been overwhelmingly positive on this this survey. So I'm pretty happy to hear that. But if you've taken it, I want to hear your honest opinion. If you've taken it, get in there and give me the feedback. But so far, it's been really good. So that's cool. All right, guys, have a great trading day. Members, I'll see you here. And Fib traders, I'll see you at 10:30. Members will be updating the positions, and I'll catch you guys next week. So have a great one. Thanks for joining us, and I'll look forward to version 5 from MotiveWave. See you guys.